All right, in this video, I'm going to look at a couple of the problems under case number 1. I'm working from the cash and accrual conversions problem set, which is in your Module 2 content area. It's just a little addendum to the Module 2 information. So let's jump into it. Number 1, this one involves purchasing a machine. So we purchased a $100,000 machine with a useful life of 5 years and no estimated salvage on July 1st. It recorded the entry with a debit to machine expense and a credit to cash on July 1. So the first thing I might do is just write down the cash entry. So we have machine expense for $100K in this case, and we have cash going out. And of course, this is that faulty cash basis system, which records the entire cash expenditure as net income right away, and the reduction in our cash asset. Now, how do we want to fix this under an accrual system? We know that under an accrual system, when we spend money for the equipment, we do want to record the equipment as an asset, not as an expense. So that's a big difference between these two approaches, right? What's being recorded? This is an asset for an asset exchange. Now, we also have to remember that under an accrual system, we would have one more thing to record. So we would record depreciation expense because we have to have that as an adjusted entry. Now this machine has a 5-year useful life, no salvage. So if we're going to apply straight line, which just always is the assumption until we get to the at the end of the semester, we'll talk about the different depreciation techniques. But over 5 years, we're going to want to record $100,000 of an expense. And so that says I want to record $20,000 per year. That is the amount of expense per year I want to recognize. So this highlights a couple of things, right? I asked in one of my classes, well, accrual accounting doesn't record this machine expense. How do, accrual accounting or cash accounting records an expense of $100,000. Accrual accounting doesn't record that expense. It records us receiving an asset of $100,000 worth. So does accrual just ignore this outflow of $100,000? No, it doesn't. It says that I want to recognize that expense, but I want to do it over the useful life of the equipment. We want to do it $20,000 per year. Now, why the useful life? Remember, the useful life is the amount of years we believe we're going to generate revenues from this asset. And again, we want to match this expense of $100,000, this cash outflow of $100,000, that cost of generating revenues for 5 years. Each year we're recognizing any revenue. We're matching that cost to those 5 years. And so we're going to spread it out $20,000 per year. This is where we recognize our depreciation expense of $20,000. I'm sorry, in this case, it would be $10,000. And accumulated depreciation of $10,000. And why $10,000? Because it's $20,000 per year. We bought it on 7/1 of this year, X1. That was the purchase date. So for those 6 months of this year, we would only apply half of the $20,000. So it would be $10,000 each year, $20,000 divided by 2. And we would record that reduction to net income. And then as we're recording that reduction to net income, we reduce the value of the asset as well. So we're having a net income, an income statement item, an income statement effect, and a balance sheet effect from this single adjustment. So this is basically what we should have done. This is what we did do. So now the correction is figuring out how to get from here over here. Because I only asked you for the correction. I didn't ask you for the accrual entry basis. I said, given that we did this, how do we need to adjust it? Well, the first thing then, we don't want to recognize machine expense. We want to recognize equipment instead. And so the way to fix that is to credit machine expense in its entirety, to get rid of that account because that's too much expense. We don't want to recognize that much expense, and we don't want to call it machine expense. We want to call it depreciation expense. And we debit that amount to equipment because we want that $100,000 not to be this, but rather this. We get rid of the machine expense by crediting it. Like, it's just almost like a closing entry, but we're just correcting something that we did incorrectly. So we had nothing there. We recorded the $100,000, but then over here in equipment, we had nothing because we didn't appropriately record it under an accrual basis. Then we make this adjusting entry, or this adjustment at the end of the period to set things to right. This updates by crediting machine expense by $100,000, which zeroes out this account. We don't want it, so that's good. And it debits equipment, so it gives us the appropriate amount in the equipment account. Now, of course, the second thing that we need to do is record the appropriate adjusting entry, and that is just as simple as recording this entry. Since none of it was over here, we can just record it to put it into play. So now we have depreciation expense of $10,000 and accumulated depreciation also $10,000. Now we have the appropriate movements in our accounts and the appropriate items debited and credited. So this one actually is a little bit easier just because we're getting rid of one thing in its entirety, removing this expense in its entirety, recording an asset in its entirety, and then recording all the depreciation expense we wanted to record, all the accumulated that we wanted to record. Let's look at one where we are just going to do sort of partial offset. So number 2 is that we paid for a $40,000 4-year insurance contract on May 1st, 20X1. It recorded the entry with a debit to insurance expense and a credit to cash on May 1st. So the cash entry we made was a debit to insurance expense for the whole contract, $40,000, and a credit to cash for $40,000. Now we know that this is not correct. This is not correct because we want to match this insurance expense amount to the 4 years we're going to benefit from it. And we've only had it from May 1st of X1 to 12/31 X1, and that represents 8 months. Now remember, it's 8 months, not 7, because 7 months would be excluding the month of May. So we have 8 months to record during the year X1. So that's the amount of expense I want to record. So let's think about what we would have done under an accrual entry system. Under an accrual entry system, I would have recorded the cash expenditure as prepaid insurance. So I get that asset for asset exchange. I get an asset by spending cash, setting up my prepaid. And then at the end of the year, I would make an adjustment to represent 8 months. So in order to figure out that, I'd say, all right, well, 40,000 represents 4 years. So that comes out to 10,000 per year. Now, we're not talking about the entire year. We only want to record 8 months. And so we multiply that by 8 over 12 to figure out how much we want to actually have during this year. So that becomes 8 over 12, which is 2/3, which means that we want to record $6,667 of expense for this year. So then we would adjust by recognizing our insurance expense of $6,667 and crediting the prepaid insurance asset. So this tells me what I want to do, but this tells me what I did do. So let's now use those T accounts are going to become a lot more essential to figure out, what the adjustment needs to be to just set this to right. And we do it with one entry very efficiently. So we have insurance expense of $40,000. It's a nominal account, so it started at 0 until we threw in that $40,000. And what do we want for the period? Well, looking at these entries, we only want $6,667. So then, how do we get there? This is going to be a very necessary skill that you're going to have to develop. We figure out a balance that we want to get to. We know where the account is at prior to closing. So we want to figure out what needs to be adjusted for. Well, in order to go from $40,000 of a debit to $6,667 of a debit, we would have to credit it by $33,333. So we're going to reverse not the entire expense, but only the amount of expense that will give me what I desire. So we already had 40 in there. Now we're crediting it by 33,333. We're getting now 6,667, what we desired. Is this the amount of prepaid insurance that I want? I'm sorry, that should be not just insurance, but insurance expense. Well, let's think about, what we want. In order to figure out what we want as our prepaid insurance, let's think about what should have been recorded. So under this, we had a prepaid insurance account that should have been debited by 40, and then at the end of the year, credited by 6,667. But that didn't happen. But if it did happen, we would have wanted this amount. So this is an accrual basis, what would have happened. And then over here, this insurance expense was the cash basis, what happened. Now, then thinking about what this entry would do to my prepaid insurance under the cash basis, well, there is no cash basis prepaid insurance going on. So it's 0, and it stays at 0 even after the cash basis entry is made. The only way to get it to where I want it to be, which is $33,333, is to debit it by $33,333 to get to our desired amount. So I want you guys to work through the remaining problems in case 1, and also when I present it on Tuesday, also the remaining problems in case 2. These will help you become more well-versed in your critical thinking skills. Thinking about what happened versus what I want to happen, and then how do I make an adjustment here? This is my correction adjustment. How do I make an adjustment to get there? And it'll help you apply that sort of critical analysis of comparing the two systems. It'll also help you figure out how to use T accounts in order to decide, this is what I want. Well, how do I get there from what was wrong? This is what I want. How do I get there from what was wrong? Sometimes you're going to have to say, well, this is what I should have done in the first place to figure out even, well, what the balance was that you would have had under what you should have done. And so it forces your mind to go back and forth between cash basis, accrual basis, what was done that was wrong, using what should be and right to figure out how to adjust what was wrong. It is a lot to do. It's not something you're going to figure out just by watching this video. So make sure that you work these problems and figure it out and ask any questions that you might have.